Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a very strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. So every time the market tested this zone, it created a strong rejection away from the level. And what we can notice is that just here, the market tested once again this exact same level of horizontal historical support and demand, and already started rejecting it to the upside. So in a situation like this, there is definitely the possibility of seeing more bullish price action being created away from this level, as already happened in the past, every time that the market tested this exact same level. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, that is where things get quite interesting, because what we can notice is that in creating this break to the upside, the market has broken above a quite significant weekly structure level. This zone, in fact, was acting as previous weekly support starting from here, from which all these rejections to the upside have been created. Then the market broke below that zone, and all that previous support was turned resistance here. Now the market has broken back above the level, so this previous resistance has now turned support, and there is definitely the possibility for a potential test of this previous resistance turn support, and then a rejection to the upside away from this level. So the weekly time frame as well seems quite bullish. We can also notice how, from a pattern standpoint, since we have an impulse and a correction, if we want to measure a correction after an impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.3 to 50% and 0.618 Fibonacci retracements all lining up exactly inside of that structure level, structure support that we have just identified. Now, this actually creates confluence of support inside of this zone, because we have both the horizontal levels and the Fibonacci levels both lining up in the same area of price. And this creates confluence of support. And inside of a confluence of support area, you have an increased probability of getting institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from the level. And institutional longing is something that we will be speaking about in just a few minutes when we move to the commitment of traders. Now, let's for now drop down on the daily time frame and continue with our analysis. Now, from a daily perspective at the moment, what we can notice is that in creating this move to the downside, the market is also starting to create an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside, completing the M pattern at the neckline. So here on the daily for GBPUSD, there is definitely the possibility of seeing more institutional longing of GBPUSD during this push to the downside into that confluence of support that we have just identified, and then to see a potential rejection to the upside, completing the M pattern at the neckline. Let's go and see what we have when it comes to the commitment of traders. Now, when we look at this data, the first thing to keep in mind is that as we're analyzing the GBP, we are already looking at GBPUSD, because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increased. We went from having minus 28.9k net positions all the way up to plus 43.2k net positions. This means that institutions went from having a negative net positioning, so more shorts than longs, with 72k shorts and only 43k longs, all the way up to now having the complete opposite. So a positive net positioning with more longs than shorts. In fact, institutions currently have 102K longs compared to only 58.9K shorts. And we can notice, in fact, how on the last report alone, institutions have added 9,000 longs and closed 8,700 shorts. So clearly, institutions are moving back to the bullish side for the GBP, meaning to the bullish side for GBPUSD. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. Well, from a daily perspective, as I was saying, this area is confluence of support. So if the market will correct to this level, there is a good probability of getting more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside, completing this M pattern at the neckline. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.